Hi, everyone. I'm Kevin Carmichael, the national business columnist with the Financial Post. I'm here to talk to Adam Felesky, the head of Portag3 Ventures, Canada's preeminent venture capital fund in the fintech space. We're going to cover policy issues primarily, open banking, which is a big concern here in Canada. But first, Adam, I think we need to hear from you a bit about what it's been like during the lockdowns. It's been a tough time for all of us. Tell me a bit about what it's been like for you.
Well, from a personal standpoint, a lot more Zoom calls and a lot more time in my basement. But truthfully, our business was well set up to adapt to this new world. Many of us spend many weeks per month on the road meeting with companies. We have a diverse workforce. Going from Singapore all the way to Paris. So we lived in video conference calls for many years. So our adaptability was quite quick. But getting into the minutia of what happened, right in the midst of the early parts of the crisis, the first thing we all did, and most venture capitalists did, is spend a lot of time with their underlying portfolio companies, understanding what were the risks to their business, how did we preserve some cash flow to extend their individual runways up until the next time they had to seek financing, and as well, what were some of the changes of priorities around their roadmap that we wanted to fast forward or put on the shelf given the new normal. And I'd say in general, we've been fairly fortunate, and this has led to a real tailwind for many of our businesses, specifically in the B2C side, business to consumer businesses. And I think, many people were testing new platforms, we're starting to get more comfortable. And I think part of our thesis is once we all went digital, there was less of that. Well, there wasn't the ability to use a brick and mortars alternative. And so the willingness to go fully digital, a platform that you may have already been using to do more of your services, really accelerated. And I think also your ability and willingness to test new products and services changed. And this is not a Canadian phenomenon. We're invested in B2C companies in Greece, Germany, France, in the UK, as well as Canada and the US. And they're really all seeing the same tailwind. And then we layer that sort of energy and interest by the consumer with a retrenchment of the incumbents. And so they are really focused internally about what of their strategic plan do they need to shift, what cost-cutting measures they need to do. Market as they typically were, trying to solicit customers as well. So it's been really interesting. And I would say the last thing I'd say, and then I'll take a breath, is we're still in observation mode. I think this new normal, everyone's still trying to digest, predicting what this second wave looks like, how that will impact individuals in different markets is a big unknown. And so we're being prudent, we're really being data focused, and we're pushing when we believe it's the right time to push. And then in other instances, we're being overly cautious if we don't see those tailwinds emerging.
Were there headwinds? I mean, I've heard similar stories like the one you just told from various companies who have said that if there's a silver lining or if there's a positive to the COVID crisis, that it jump-started that shift to a digital economy that at least here in Canada we're sort of slow to fully embrace, like they have in Asia and Europe and elsewhere. So that makes sense on that side, but and it makes sense also given that your fleet of companies would benefit from the tailwind as you described it. But what sort of headwinds were out there? Did you run into some headwinds that have forced you to rethink how Portage might go forward?
It's interesting. I think the companies that are experiencing Some headwinds are more on the B2B side, so those that are selling into incumbents. And so one, they have to sell that service, product and service digitally, which they've never really done before. Those incumbents, as I mentioned earlier, are retrenching and trying to think about what their capital priorities are. And so the sales cycles of those businesses feel like they're extending for sure. And in some cases, the existing customer base has been really impacted, and therefore it's leading to potential churn, or not getting the imminent approval that they thought they were about to receive. So for example, we have one portfolio company that has an airline as a major customer. Obviously that's been very difficult.
What's your data telling you about how the recovery might unfold as sort of wrap the COVID portion of our chat with this one? People are also very curious, looking for perspective wherever they can get it on how long it might take us to get back to something that looks like normal. What do you see happening? What are you positioning for?
Yeah, I think the truth is no one knows until a lot of the immediate relief gets flushed through the system. So we've seen a huge pickup in consumer spend. We've seen a big pickup in consumers reaching out to wealth management platforms and trading platforms. We've seen them, acquire different types of products and services more readily. But part of that feels like it was a catalyst because of the event. Part of it feels like many people have more time on their hands, and they, quite frankly, have received some financial relief. So until we get through that sort of initial shock of the relief capital going through the system, I think it's really hard to say where we're at. And then, as I mentioned before, we're just seeing the beginnings of the impact of Wave 2 in the United States. That for certain is the biggest unknown. So I'm sorry I can't look through the crystal ball and give you a definitive answer, but that's why we continue to be in observation mode. But the data for certain from April on has been much better than anyone would have expected. But I think we are cautious about whether that's a false positive.
Does your instinct tell you anything? Like, I've heard everything from depression to the former Bank of Canada governor telling me on his way out of office that he anticipates sort of a surge in entrepreneurial activity, and so he's nowhere near as negative as most people. Where do you fit on that spectrum?
We feel the enthusiasm. It feels like we've been working so hard and long about creating the momentum for many of our young businesses, and now this event, as awful as it has been, has just been a true catalyst to people embracing digital services in a way that they wouldn't otherwise have for many, many years. So we're excited about what this new future looks like. But that comes from the innovator and entrepreneur in me. For certain, we're cautious and concerned about Q4 and Q1 of next year, again, when this capital relief gets flushed through, if Wave 2 comes again, and whether just the governments can continue to support our respective economies. So I guess I'd say I play both sides of that argument, but in general, I would say I'm more enthusiastic about the opportunity than concerned about the risk.
Okay, thanks. Look, one of the oddest moments for me during this crisis was observing the finance department postpone its open banking review, which I find odd, sort of an echo of what you said off the top. I mean, is presumably a big portion of that would have been taking place by companies that are Zoom native. Tell us what's going on there, your impressions of the decision to postpone, any updates on what might be happening with that review, and general thoughts on Canada open banking policy as well, non-open banking policy, I suppose, but where we might be headed on that subject.
Yeah, I mean, we've been advocates for this for many years. I've written several op-eds on the subject, and we've worked very closely closely with the different levels of government. Look, we're sympathetic to the fact they're dealing with many issues in this post-COVID environment. But for certain, had open banking been in place, the ability to deliver relief to both end consumers and small businesses in Canada would have been much more efficient. Why the fintechs, like a company like Thinking Capital that has delivered over $1 billion of loans to small businesses over the last few years, wasn't able to participate in the program to facilitate those loans in a more expeditious manner is a little bit bewildering. But that said, look, I think we have made progress. We had the report on open banking come out. They established the Open Banking Advisory Committee. They then finally published the report in January. They've established now a second round of roundtables to really talk about the how to do open banking, not the why or if. So that's significant progress. The current update is that the committees or the roundtables will start occurring in the fall. I suspect they'll come back with a report and recommendation in Q1. We've got the Senate that published a report on the benefits of open banking, and they've asked the Minister of Finance to respond to their several recommendations, and we're hopeful that that will happen. But the honest, so I think it's inevitable. It's going to happen. It's just a question of when. And I think we just need more political will. We need more consumer advocates telling the end Canadian consumer why this is important to them and what would be the benefits of having this infrastructure in place. The analogies I use sometimes, it's like an airport. The end customer doesn't, stand up on their soapbox and say, I need a new airport. But when that beautiful airport's there and they can travel to many more places and do many more things, it's a great good that the government's provided. Open banking is just an infrastructure. It's a good that we need to build on top of our financial services so we can compete and innovate and deliver Canadians the best products that other people and other citizens in other countries receive today. So it's an eventuality. We will get there. We just need more people pushing so the political will is there to move more quickly. The last thing I would say is we do believe the updated PIPEDA Act will happen hopefully in Q3, Q4 when the government reconvenes. PIPEDA is effectively the Privacy Act, and it governs a lot of things around our personal data. Mm-hmm. And particularly in a post-COVID world, the explosion of data just continues to increase exponentially. And the ownership right of that data is so important. And we believe within PIPEDA, it will acknowledge that individuals' data is owned by them and not by the incumbent institution who services them, and that they should have the right not only to be able to port their data, but able to port it in a way that is interoperable so they can send it on to someone else. So I'd say the most exciting thing that could happen in 2020 will be the update of PIPEDA, which should provide sort of some of the policy catalysts that we need for open banking.
Okay. To what extent is the privacy issue, the meta issue of privacy that we've become so familiar with, a roadblock for the fintech industry? I mean, we just published over the last couple of weeks a pretty deep investigation by a colleague of mine at the Financial Post, sort of just telling everybody how the Tim Hortons app has been essentially spying on them. But these are complicated issues. So people are, I would assume, likely going to get hung up on the spying part and sort of apply that across the board. And I would think you'd see a segment of the population that just stick with what they know, which of course is like the big 5, big 6 banks. So talk to me a bit about that. How are you going to overcome that barrier, or am I overestimating it? Is it in fact not such a barrier for what you guys are trying to do?
So it is, so earning trust is the key of any of our businesses. And, the big banks have been invested in their brand and have demonstrated, and they trust that they will preserve their capital. What's interesting, though, is if you ask Canadians a different word and you say, do you trust them to do what's in your best interest? The answer is very different. And so I think there is the momentum by the Canadian consumer to look for a product or service that does what's in their best interest. But you have to build that trust, and that takes time. We're in the first inning of innovation in financial services in Canada. If we look at Wealthsimple, the platform is less than 5 years old. However, it's now touching close to 1.5 million Canadians. Every day that goes by, that end customer is gaining more trust as it delivers on its promise. And so part of it is just time needs to go by to build that trust. Also, I think the other thing is we as innovators need to expand our services. We typically can only lead with one thing because it's such a huge investment. We do it really, really well. But what we're starting to see is as we mature our young companies, they're adding additional services. So they can be a platform to serve the end consumer in a platform sense versus just an individual product. And I think that's probably what's most exciting in the next 5 years.
Talk to me a bit about the opportunity cost of the slower approach, I guess, we're taking here in Canada to embracing the fintech side of the financial services industry, the very deliberate approach to modernizing the payment system. What are we missing out on here? Are we taking for granted that, I guess, I'll put the question this way, are we taking for granted that Canada, by virtue of whatever reputation it has out there in the world, can just sort of own this opportunity whenever we get around to it? Or is there a risk or that we're being left behind to a certain extent? Should we assume that we can catch up once we get the regulatory system in place that we want?
Yeah, look, I think there's a bunch of different lenses to look at that risk that you're speaking of. So there's several stakeholders. There's the innovators, there's the end consumer, and there's the incumbents. So maybe starting with the end consumer, I think there's risk that consumers don't have the access to products that other consumers in other markets have. Absolutely. I think there's risk that the current products and services that they do have access to, they don't have the transparency to assess whether they're paying the right fee for that service. And then three, I think they're apathetic because they don't have much choice. So, they're not even in the mode of going to a comparison site like many consumers do in other markets because they don't have access to multiple potential service providers. So I think there's many risks on the consumer front. On the incumbent side, obviously I've got a different self-interest, but I would argue, and I'd argue to many of our LPs that are corporates and incumbents, is there isn't a revolution happening. It's a digital evolution, and you just have to get invested because you'll be left behind. Every day that goes by that you're not investing in your own digital transformation, the more risk you have to your incumbent business, particularly as the segment shifts. Many of the digital enabled platforms that we invest in are very focused on sort of 25 to 35 year olds. In 10 years, they're going to be 35 to 45, and they're going to be, the best customers that many financial service incumbents would want to have. And so I think there's a big risk that if they're not serving that segment today in a way that they expect, they're not going to service that segment going forward. The other risk I think we have is that foreign platforms that are being built on the foundation of this policy innovation in other markets are going to come to Canada and be the winners when it eventually opens up, because they've had many years to scale their businesses. They've got the margins and the unit economics to deliver a cost deliver a product or service at a fraction of the cost. And so again, from a policy perspective, the further we're behind on this, I think the greater the risk that the incumbents are threatened by foreign competition.
I want to ask you a bit about that final point. I mean, we've seen most recently Shopify take a few more steps into financial services. Of course, some of the other big tech companies are already there, have been there for a while. Is that helpful or harmful in developing a fintech ecosystem in Canada? The fact that you have some of these a new set of behemoths presumably getting ready to step up against the existing behemoths. But what happens to the smaller companies like the ones in your portfolio that sort of trying to get a start on their own? Is there a chance that these guys are just going to block out the sun and will be sort of go from one oligopoly to another?
Yeah. Look, our perspective on this is when we look at big tech, they're being very careful and thoughtful about this. I think their appetite to be a regulated entity is very low. It creates enormous bureaucracy and inefficiencies, and it's just not their expertise. And so our view, and we've seen this examples with Goldman and Apple, we're going to see more partnerships between incumbents and big tech as they try and enter into financial services. But that also is true on the younger end. Many of our companies partner with other technology companies to be that specific widget to their broader solution. And it might be white labeled, and you might never know that this one piece of the Shopify technology actually is enabled by someone else. I think there's opportunities for everyone. I truly believe if you've got a great product and you've defined your product market fit and you can do it better than anyone else, anyone will partner if it makes sense. I would say there are two worlds emerging, however. There's people that are building open API platforms and saying, this is our core product, everyone else can build on top of it, and our customers will choose what they wish. And then there's sort of the Apple model where it's fully vertically integrated and we do everything our own. And I don't think there's necessarily going to be one winner. I think both of those models most likely will exist in the future. But the Shopify, I think, is so far is taking very much of an open market model and having people build really cool apps and features on top of their platform, knowing that they can't compete with thousands of innovators innovating and building customized niche products on their platform at the same time internally.
Okay. We're starting to run out of time there, or at least the amount of time they asked us to fill, but a good thing about a Zoom chat is nobody can necessarily give you the hook. I've got a couple of questions. One, I wondered if you could paint a picture of what the fintech ecosystem would look like if an open banking regime was in place, say similar to that of the UK or Australia or some of these other jurisdictions that have been faster to move on this. And I wonder if that might help the public get a better understanding of what it's missing out on by not having an enabling regulatory environment for some of these companies. So what might it look like, or what opportunities might exist for smaller companies, consumers, if if your group of companies, for example, had a better regulatory environment in which to work?
This is a great question and very important one. So look, I'll give a few use cases to define it. So imagine that you were shopping for a mortgage. So today what you do is you can go to if you're sort of more enabled, you go to a comparison site, you search for different rates, and then you would make this application. The application, while it could begin with a digital process, quickly becomes a paper process. And then you have to replicate this that application at how many different platforms that you want to potentially get bids from or quotes. In an open banking world, you would be able to pull your credit file and all your banking history. You would quickly be able to send that to a myriad of different mortgage brokers. They would all compete for your business. And instead of the application to close being 90 days, it could be a few days or a day or an hour. And as it gets more efficient, minutes. I think that's a very real example of mortgages. Small businesses, I think, is another really great example. In Canada specifically, we're one of the worst lenders in the G7 to small businesses from our incumbent institutions. And part of the issue with small business, it's so commingled with your personal finances. And in an open banking world, I could quickly discern what is my personal finances, my small business finances, but bring them together when appropriate. If I'm taking personal guarantee on something, I can bring my finances together, and again have an auction process for my business in a way that is much more transparent versus only my bank knowing, kind of having my small bank relationship, knowing that set of information, someone else having my personal financial information, and really only being able to use those separate relationships to be a source of potential lending capital for me. It's very inefficient.
Okay, thanks for that. Two final questions to wrap up, and they're big ones, broad anyway. For those who are unfamiliar with Canada's political culture and political economy issues here, just why has the country been so slow to embrace fintech? We've been sort of allowing the conversation to spin around open banking, so we can stick with that. I mean, the UK is there, Australia is there, Europe is there. We aren't. Why?
I'd say two reasons. One is the financial crisis. We came out of the financial crisis quite well relative to other markets. The UK was a disaster, but it also gave them the opportunity to strip down the whole platform or infrastructure, revisit, rethink their policy, and build from scratch. Australia had the Royal Commission, which found a lot of issues from an anti-competition perspective, which led to catalyst of a lot of their policy around open banking. So I'd say the financial crisis, the way we performed so well, ironically, has been somewhat of a hindrance. And the second piece to that, and Senator Wetson was just speaking about this with me this morning, is we are risk mitigators. We're not risk optimizers. And there's definitely risk in open banking and taking that initiative on. We believe there's greater risk with not taking it on. For example, over 3 million Canadians are using what's called screen scraping, where they give their banking credentials to platforms to access their data in a very unsecure format. So we should be optimizing, taking that risk away, and therefore creating the benefit of innovation and competition. But that's not our framework. We're just about how do we mitigate all risk. And so I think that is part of the construct that we need to solve, and we all conclude that we need a lot more consumer advocacy behind this. And so the more we can bring to life use cases, some of the ones that I've described, I think the better. But the political will come, I believe, and is there because of a post-COVID digital world. Cyber risk is now increased exponentially. The digitization of everything's happened in 2 months versus, in many cases, people expected to take 10 years. And so hopefully that leads us to some momentum in the end.
Okay. And the last question was also open-ended, but it's really more to get an outlook from you. What does Portage have planned over the next 12 months, given the environment we're in and regulatory hurdles you need to try to get over? What are priorities for you going forward?
We've been playing offense. We're excited about the environment right now. There's lots of opportunities. We just closed 2 lead deals in the last 2 weeks. One of the teams we'd never met before, was so pretty fascinating. So we believe that this is a great opportunity or a great time to invest. We're doing that proactively. We closed our second fund in November, so we've got a majority of our cash still to deploy. So we're just seeking opportunities on a global basis. I'd say, unfortunately, we're probably spending more time outside of Canada than inside of Canada because of some of these headwinds, that it's difficult to make some of these investments believing something may occur. And we just don't have any capital in specific businesses that are so dependent on open banking.
All right. Thanks, Adam. Appreciate this.
Thank you.